Hi everyone, this is Kishore Puruswani. Welcome you all to this second webinar in the series of Basics of Investments. Today's module will be how to invest in stocks. As discussed, we are going to now discuss on how to invest in stocks. A quick recap of what we discussed in the last webinar. We discussed why and where to invest. In why, we discussed about the financial goals, about the parallel income, about parking surplus funds, and then we discussed on why and where to invest. In the where to invest, we looked at the various options. The option of gold, PPF, fixed deposits, real estate, stocks, and then when we compared the various options, we found that stocks are the options where the returns are high, liquidity is high, and risk is comparatively lower. So today we'll be discussing on how to invest in stocks. Initially it was why and where. So let us first understand that we can invest in stocks basically by two means. One is by investing in the primary market, and second is of course the secondary market. We'll be looking at it, what is primary market and what is the secondary market. The primary market is where securities are created. A company issues new stocks and bonds to the public for the first time and subsequently also. And the routes could be preferential allotment, through private placement, institutional placements, initial public offers, follow-up public offers, offer for sale, rights issue, bonus issue, and many other means. Again, I am reiterating that this series is basically for those investors who wish to learn and then invest. Many of you might be already investing and might be aware what is primary market, what is secondary market. But for the benefit of the new investors, the new generation or the beginners, we are discussing all these aspects so that those who are beginners are able to learn and invest fruitfully. After these stocks are allotted, these are then listed on the major two exchanges or either of them, that is Bombay Stock Exchange and National Stock Exchange, commonly known as BSE and NSE, and then they are traded in the secondary market. Traded means you can buy them, you can sell them as an investment option. Of course, there are traders also who invest not only for the short term, but on the day basis. The secondary market is where investors and traders buy and sell securities. It is what we typically call as the stock market. Now, what is the difference between primary and secondary market? The objective of the primary market is to raise funds, whereas the objective of the secondary market is the capital appreciation. In the primary market, company is the beneficiary. In the secondary market, investor is the beneficiary. In primary market, company sells, investor buys. Whereas in secondary market, investor sells to another investor. In primary market, price is fixed and declared. Here the price is market driven. In the primary market, investors rely on prospectus, whereas in the secondary market, investors rely on the past performance analysis and the future predictions. There's a moderate risk in primary market, but there is also a moderate to high risk involved in the secondary market. But as we discussed in the previous webinar or the first webinar, that if we are investing for a long term, It is not a risky avenue. Primary market will give low to moderate returns. We'll discuss why in the coming slides. Whereas secondary market can give you low to very high returns also. The market maturity has considerably improved over the years. What it used to take, the total allotment process, application process used to take months, maybe 45 days, maybe 60 days. Now it takes only 7 to 10 days. You invest today, on the 7th or 8th day, these shares are in your account or the refund is back in your account. So if you wish to sell, you can sell it as soon as the stock is listed. That is, the total investment period maybe from 7 to 10 days. And on the contrary, in the investment period could be short term, mid term, long term. Of course, in the primary market also, if you are not interested only in the listing gains and you want to be a long term investor and have full faith in the company, you can be invested, keep invested. And the major why we said that we have low to moderate returns is, the first is that the purchase or the allotment chances are very, very low. The issues get subscribed 50 times, 100 times, 10 times, 20 times. And then we as an investor get a very small lot. At the most, investment will be in the range of only 15,000 rupees now these days. The lot is so adjusted that the net investment is to the tune of around 15,000 rupees. Whereas in secondary market, the purchase chances are almost certain. If you are willing to buy at the market price, you can instantaneously do it. Immediately we can buy the stock or sell the stock if we are opting for the market price. Here is a small study. If we see, just compare the period, Computer Age Management, which was listed only last week on 1st of October. The issue opened on 21st. The refund was on 29 September, so hardly 8 days. The issue price was 1230 rupees. The size was 2000 crores plus. Similarly, CanCon Specialty, again total period was around 8 days. Root Mobile, again 8 days. On the 12th day or 13th day it was listed. Simply Happiest Minds also. 10th day or 11th day it was listed. Rosary Biotech, again on the 10th day it was listed. SBI Cards took a bit longer in the listing. It took around 14 days. So this is the total investment period we need in a primary market. For those, the young generation who might not have seen the previous complexities involved even in the primary market, we had to take trouble to first get the form, fill up the form in detail, a 2-page form, 3-page form, with a risk of always making a mistake, signing it properly, either as a sole holder or a joint holder, making nominations. But now the total process has become very easy. Just at the click of a button in your Demat account, if you are having an online account, it will take, I would say, not even 1 minute to invest in an IPO. I'm saying yes, it's only 1 minute. Now let us take the study further. What happened to these IPOs in 2020? Computer Age Management, which was the issue price was 1230 rupees. It was subscribed 47 times, but the lot size, as I said, was only 12 rupees. It was listed at 1518 rupees. It touched the high of 1,550 rupees on the same day and closed at 1402 rupees. So some of the investors on the day of listing, because only one day has passed, we have to see the performance or the behavior on Monday, that is tomorrow, the profit was to the extent of 14%. Similarly, Chemicon Specialty, it against an issue price of 340 rupees, it got listed at 731 rupees, but closed at 585 rupees. So again, if one disinvested at the closing price, there was a net gain of 72% practically in 10 days. But it will be on a very small amount of only 15,000 rupees. Because if you are very lucky to get an allotment because the issue has been subscribed 149 times, very bleak chances of getting an allotment. If you are lucky to get an allotment, you would have got around around exactly 44 shares. 44 into 340, maybe around 15,000 rupees, 14,000 some rupees. And so 72% gain on 14,000 rupees. So if you remember in the previous slide, we said low to moderate gains, because you might have invested 2 lakh rupees, which a retail investor can do at the maximum, but the allotment will be only one lot, that is 44 shares. Similarly, Route Mobile, very interesting. The issue price was 350 rupees, size 600 crores, subscribed 73 times. Lot size was 40. Now you see, it got listed at 708 rupees, 100% jump on the listing day. And it went further up on the same day. It closed at 651 rupees. The current price is 784 rupees. It has touched a high of 988 and low probably on the day of listing 625 rupees. So a net gain of, even if we sell today, is 124%. And if we chose to sell on the listing day, still we went home with a gain of 86%. Similarly, Happiest Mind gave a gain of 123% on the listing day. It touched a high of 395 against an issue price of 166 rupees only. More than 100% jump. And today it is hovering around 343 rupees. Still appreciable benefit or profit of 106%. Rosary Biotech, another interesting story. Issue price 425 rupees. Got listed at 670. Closed at 742. After listing, it went further up. And today it is hovering around 796 rupees after touching a high of 858 rupees. So if we see, in a matter of 2.5 months, it has given a gain of 87%. And of course, if you would have disinvested at 858 rupees, if you would have been lucky, then further gains. Now, this is another story of SBI Cards, a very good company, probably the only company listed in this category. Issue price was 755 rupees. Size was 10,000 crores plus. But unfortunately, it got listed on 16th of March. Nobody knew that from 16th of February onwards, there was a downtrend in market till, not even downtrend, I would say, a bear effect in the market. And so when the share got listed, it got listed at 658 rupees only. That is 100 rupees less than the issue price. So on the listing day, if somebody sold it, it closed at 683, he had to sell it with 9% loss. Whereas after 24th March, the price further went up. Of course, while it came down to 24th March, it touched a low of 496 rupees. And I'm sure many investors would have lost the patience. Not only the primary investors, even the investors who had purchased in the secondary market would have sold a considerable holding at 496 rupees. But yes, there would have been people who would have invested at 496 rupees. And today the price is hovering at 839 after touching a high of 868 rupees. So the lesson is that if a company is good, it is going to perform. If not on the listing day, probably after that, you have to have patience. You have to have the confidence in your company or in the decision you have taken. And maybe even in 6 months or 6.5 months, a return of 11%, that is 22% annualized. Almost 3.5 times to 4 times the bank interest. And here I am saying why? That whoever applied got a firm allotment of at least 19 shares. So if you are a family of 4, family of 5, including your parents, including, or 6, and if you have put, say, 1 lakh rupees, 15,000 per application, then on the entire amount of, say, 1 lakh rupees, you would have gained 11% as on date. So yes, you can make money in primary market also. After seeing the previous slide, all of you would have been thinking, yes, why not to invest in primary market? But the story is not so lucrative. Now look at the study of 2019. I have purposely picked up those which have not performed. Ujjai Small Finance of the famous group, Ujvan Group. Issue size was 750 crores. Subscribed 165 times. Issue price was only 37 rupees. Got listed also. Gave handsome gains of 51% on the listing day. But it went to as low as 23 rupees and as high as 63 rupees. It is hovering at 32 rupees today, a net loss of 12% on date if you are holding the shares and if you have not disinvested. Similarly, now see how big issue this one is. Sterling and Wilson Solar, 3,000 crores plus issue price 780 rupees. Not a single day it has gone above the issue price. It got listed at 700 rupees only. And the issue was not subscribed fully. It was subscribed only 0.85 times. So if you are sitting with the shares today, unfortunately, we are on a loss of 72%. Spandana Sphoorti, very interesting story. Issue price 856, got listed at 824. Closed at 848 with a net loss of around 1% only, went high as 1400 rupees and as low as only 400 rupees against issue price of 856. And today it is at 512 rupees. That is a net loss of 40%. Similarly, Chalet Hotels, issue size 1,600 crores plus, issue price only 280, got listed at 291, closed also at 291, went touched 395 and the low was 99 rupees only, almost one third. And the current price is 145 rupees. So net loss of 48%. So the learning is that even in the primary market, we have to be vigilant. We have to be knowledgeable. We have to know what the company is doing and whether we should invest in the company or not. Now let us look at another story of IPO. IRCTC, issue price 320 rupees. Subscription 112 times, a well-known company. I think in this group also, there will not be a single participant who doesn't know about IRCTC or has not used IRCTC app. The listing price was 644, almost double. And the close was 728 rupees. And since then, it touched a high of 1,995 rupees. Incidentally, only 1 year is going to get completed on 14th of October. So if you are lucky to get the allotment and if you are lucky to exit at near the peak, it was handsome money you made, and handsome in the sense 6 times your investment. On the day of listing, it also does 625 rupees. And the current price is 1,380 rupees. Now let us look at the graph. It touched peak in February, and then there was a steep fall. And we do not know the reason why. I am sure everyone knows the lockdown was announced, the trains stopped running, so the business to IRCTC stopped. And it came down, tumbling down. And then after 24th March, it has gone up. After the unlock has started, some of the trains have started running and the performance of the stock is flat. If you see, even after the severe impact of lockdown, not even on a single day, it has touched the issue price. So if the company is good, it will give you performance. Always. Always it will give you performance. Just to compare the two shares, Spandana Spurti and IRCTC. How many of us would have heard the name of Spandana Spurti? Not many. Maybe some of you would have invested. It was in the finance, it is in the finance sector. Subscription only 1.05 times. IRCTC 112 times. The profit in IRCTC is to the tune of 3.3 times, whereas loss in Spandana Spurti is to the extent of 40%, almost in the same period, 19th August and 14th October 2019, maybe a span of 1.5 months or 2 months. So the learnings from primary market are that we need to choose companies properly. We need to read the prospectus. We need to listen or read the opinions of experts. But please don't get misguided. You have to have confidence in the expert whom you are following. If you are not yourself the expert. And please don't make a mistake. Nowadays, there's a bandwidth given. Say suppose for IRCTC, the bandwidth would have been 300 to 320 rupees. There was an option to bid at 300 rupees, but no retail investor should do that. Retail investors should only choose the cutoff price. Let the company decide at what rate it is going to allot between 300 to 320 rupees, and based on that, you will get the shares if you are lucky to be one of the allottees. And very important, if we have seen number of cases, we have to be vigilant on the listing date and take informed decisions, either to sell or to hold. And if you are a secondary market investor, to buy further. Yes, buy further. If in IRCTC you would have made investment on the listing date, you would have been sitting still with handsome gains of 3 times, or on the current price 2 times. Similarly, we have seen the euphoria in many other such stocks. So we need to take, and of course, the reverse is also true. After getting listed on a high price, these stocks have fallen down. SBI card is an example. Of course, the market was also the culprit. Not always the market will be in a situation what we have seen in the last 6 months, but we have to be very, very careful before taking a sell, buy or hold decision. This was on the primary market. On the secondary market, we'll be discussing the options in the future webinars, where we'll be seeing how we can invest in the secondary market. It could be through direct investment, it could be through mutual funds or various other routes. We'll be discussing all these in the future webinars. Since I said this is for the beginners, many of you would not have invested till date. So if you have not invested and are ready to invest, the basic requirements are a bank account, which all of you might be having, and net enabled, which I am sure that everybody is having a net enabled account. It makes life easier. It makes investment easier, not only in primary market, but in secondary market as well. For the bank account, you need an Aadhaar number, you need a PAN number, and very important, for investing in market, you need a Demat account. There are only 2 depositories today, CDCL and NSDL, where the shares or the securities are kept in soft forms and basic knowledge of investment. This is what we are trying to do, share knowledge with you so that you can take an informed decision. And very important is some surplus funds. And I am sure that if you want to start, say in primary market, probably maybe 1 or 2 issues in a month, good issues, not more than 8 to 10 issues. So at the most, if 2 or 3 issues are also coming together, you need hardly 45,000, 50,000 rupees. So as low as 14,000 rupees, you can start, or 15,000 rupees, one can start investing in a primary market. And if you are lucky, you will have the gains, you will get the courage, you will know the nuances of the market, and then of course, you can take steps further. What is a Demat account? It is dematerialized account to hold financial securities in an electronic form, soft form. Today, I don't know how many of you would have seen the share scripts. We used to get share scripts after buying the same, maybe after 20 days, 25 days, 1 month, and then we used to take trouble to send it back to the registrars to get it transferred in our name and then sell in the market. It was a lengthy process. Today you buy the share, it is bought in your name. On 3rd day, that is T+2, on the 3rd day, it is in your account. And if you sell today, the shares are taken away from the account. On the 3rd day, you have money in your account. Demat accounts, as I discussed, are maintained by depository organizations, the National Securities Depository Limited, NSDL, or the CDSL, Central Depository Services Limited. Thank you very much for a patient hearing. I'm sure some of you might be carrying away some learnings from this webinar. Looking forward to your valuable suggestions and feedback so that we can learn together and invest fruitfully in the markets and, of course, meet our financial goals. Now, thanking you once again and opening this forum for the question answer session. Thank you very much.